Hey, welcome back to the Corporate Finance Academy. Today we're going to talk about FP&A salaries. All right, so FP&A salaries, we'll go through some different factors that influence compensation. We'll just refresh on the job hierarchy, the organization structure. Then we'll talk about compensation by position, and we'll wrap things up. We're going to talk now through 6 plus a bonus factor that determines salaries. So there are a number of things that's going to influence how much you make, and we're just going to touch on that list right now. So first is your job title. This one's natural, normal, everybody would expect it. But are you an analyst, a senior financial analyst, a finance manager, director? Where you're at, your ranking within an organization will impact your comp. Company ownership. So what is the ownership structure of your company? Is it a public company, a Fortune 500 company? Is it a small family business, or is it private equity owned? Is it large private equity, small private equity? That's going to affect compensation. And actually, going back to company ownership, you might be a vice president of finance, but you might be at a small $30-40 million revenue company. And that's a lot different than being a vice president at a $20 billion company in terms of compensation. So then years of experience. So how many total years of experience do you have? Industry. What industry is your company in? Are you in a higher paid space like the tech or software, financial services, or are you in a lower comp position? Are you in a nonprofit? Are you in at a school or a university? Or are you in manufacturing? There's all different pay scales across different companies and industries. The size of your company, I mentioned this before, but are you in a large company, a medium company, small? And those are just rough approximations. Everybody has different definitions for what makes those up. And sometimes it's not just company size, it's company trajectory, which isn't on here. But you might be at a medium company that's on a huge growth trajectory, and they're hiring the top talent that they can get their hands on. They might pay more than a large company. And then location. So are you in a high cost of living, medium cost of living, or low cost of living? And when you think of high cost of living, you're thinking of places like New York City and Boston. Medium cost of living is going to be places like, I don't know, I'd think about the larger Midwest cities, excluding Chicago. So St. Louis, Kansas City, Cincinnati, Columbus, Indianapolis, and then low cost of living. It would be smaller towns, smaller cities. But I'm just talking about the United States. Obviously, this differs country by country. You have some very high cost of living countries out there like Singapore, and then you have low cost of living countries. So this will vary based on your location. And then the bonus here is performance and potential. So I'll see sometimes people asking questions like, oh, I found out that this person makes $10,000 a year more than me and they're in the same position. Now, it could be that they have more years of experience, but let's take that out. Let's see the same amount of years of experience. It could just be that the company views that other person as having more potential than you, or they are performing better than you, even though you're in the same level of job. Or maybe they're just a better negotiator. So there's a lot of things that can determine that, but companies will often pay for performance and the potential that they see in someone. So a couple quick points on compensation before we jump to the actual pay ranges. So the first is there is no standard, and it goes back to what we talked about on the last page. But you could have you could look at the senior financial analyst role, and you can have somebody who's 3 years into their career, and they might be making $85,000. And you might actually have somebody who's been a finance analyst and progressed to a senior financial analyst, but they're 35 years into their career. And even though they may not have gotten big pay raises, 2 or 3% every year for a long time, that senior financial analyst could be making $145,000 a year to that other person making $85,000. And that's just the ranges that exist. So when you think about comparisons, you need to think about all the factors: title, company size, years of experience, industry, location, company ownership, all the stuff we just talked about. And then two, salary isn't linear. And this is a really important point if you're playing the long game and you want to get into director or VP or senior vice president, CFO roles, because there are these inflection points along the way where you get huge jumps in payment. And if you're really trying to maximize your compensation, you want to get those raises. It's not about taking a new senior finance analyst job that gives you an 8% raise or a 10% raise. It's about going from finance manager director or director to vice president and increasing your total compensation by 20% or 30% or 40%. And that's what happens when you start to get bigger bonus percentages that can pay more than target, and start to get your equity shares. And that's where you really get these large increases. And just to share with you, and I don't have numbers on here, but this is an actual chart from the first 17 years of my career where you can see what happens to my compensation as you go through the years. So you start at your entry-level salary and you make some solid progress. And I was getting promoted every couple of years, so it wasn't like I wasn't progressing through the organization. But you can just see these inflection points, which happened when I got the promotions into the next level. So you go from a senior finance analyst to a finance manager, or a director to a VP, or VP to senior vice president. So they happen in those jumps, and sometimes they happen when you change companies to get to those. So there are these big jumps, and that's what you want to target if you're trying to maximize your compensation over your career, is getting to those points. Okay, quick regrounding of the tiers in FP&A and corporate finance. As you work your way up from the bottom, one thing that's important to remember is you get to that finance director or senior director or vice president, divisional CFO. Those are often no longer just FP&A. You're often more of a finance leadership role where you're often overseeing both FP&A and accounting. So just something to keep in mind. It's not strictly FP&A. Okay, so let's dive right into this. So you can read the charts, but you've got finance analysts on the left, and that's where we'll start. And the way you read this is you've got your base salary in the ranges, and we've highlighted the medium cost of living, where you put the midpoint here at $80,000 for a finance analyst, and bonus percentages, and then your total comp adds the bonus onto the number. So if you're a high cost of living, you might be in the $130,000. You could be as high as $130,000 in a high cost of living city on the high end of the range, but you could be making $55,000 in a low cost of living city. And then senior finance analyst, you can see how you get a nice bump there. So you're now in the range, the base salary range of 90 to 130, and you could be at the $150,000 range on the high end. And again, these are ranges. It could differ based on where you work, and some very high cost of living cities may have better pay scales, and you may work at a company that gives you a little bit better bonus percentage. But this should give you an idea to ground you in what that compensation looks like. Finance manager and finance director. So if you look at the right real quick, you'll see an extra column or an extra row in there for equity. We'll talk about that in a minute. But on the finance manager side, this is when sometimes these don't necessarily have direct reports. It's more of a title for finance manager because you're managing an area. But you may have direct reports, and having direct reports can certainly influence you to a higher compensation than if you don't. But this is where you see the numbers. You can crack the 200,000 total comp mark, which is a healthy compensation. We've got the range for base here, kind of in a middle of the range at 147, and for total comp, that's 162. You're looking at a bonus percentage, usually somewhere between 7.5 and 20 or so percent. We've got the average here at 10. And again, your market may vary. This can differ depending on where you're at. And again, all we split out here was low cost of living, medium, and high. You have to think about years of experience, ownership of your company, all of those things that we talked about at the beginning. And then on the finance director, so we added in the equity portion. But this is where you can see a noticeable jump here, even in the total compensation. So if you look at the medium cost of living in the middle of the pay scale, you're going from 162 here to 214. So that's a very healthy increase, and that's what I was talking about, those inflection points. It's a 32% increase going from finance manager to finance director here. So those are the things that you aim for if you're really trying to advance your career and get to that portion. And the biggest reason, or one of the biggest reasons, is you can see the base salary isn't all that much higher, but your bonus jumps significantly and your equity jumps significantly, going from getting nothing to getting, maybe as much as 15% of your base salary. And frankly, sometimes it can be more, and companies are moving more and more in that direction. The last one we're going to cover here today is vice president. This is another step change. So you can see, if we do that same rough math, you can see here that you've got 335,000 as the median here, and at the director level you've got 215, call it. So you're going 120 versus 215. You've got an increase here of maybe 50% going from director to vice president. And again, it's coming from these bonuses and this equity. Sure, you get a nice base salary bump, but these bonus and equity pieces can really be wealth creators. So a few points and notes on the side. These roles really can vary widely. You probably are not going to be a $235,000 salary if you're a VP at a less than $500 million company. It's probably a smaller role. You might be as low as the 175 mark. The next thing I'll tell you is compensation here becomes more and more tied to company performance, right? You're gonna, of your total comp, your bonus and equity become a bigger and bigger percentage. And sometimes you can overachieve on those and take home more compensation. But in a year that's down, you're not going to take home nearly as much as you potentially could. Equity, if you're not familiar, that can take the form of restricted shares, options, and these have all different vesting schedules and sometimes vesting requirements. For example, in a PE-owned company, it might be restricted. Your equity might be restricted until the time of a transaction, so until the business is sold or you do an IPO. In a public company, it's usually going to vest over some sort of time schedule. And like I mentioned, companies are shifting more and more towards performance-based. So you're seeing base salaries grow slower, and you're seeing companies really pile on higher and higher percentages for bonuses and equity because they want people to feel vested in the company. They want them to feel like they have to influence the success of the company. So that's all we're going to talk about today. As we talked, it varies quite a bit, compensation. We didn't touch on other compensation. You still have companies that do things like give you a car. You've got 401k matches, you've got benefits, you've got all these other things that are part of your compensation package. I reinforce that there are big leaps once equity is involved. That's where you can start to create real money for you and your family. And we're going to do some more videos on salary. So we haven't touched on CFO, Senior Vice President comp. That's something that people are interested in. I think mostly because they want to understand if it's something they want to shoot for and know what the benefits are. But also I want to make some videos to talk about salary decisions and how people can think about should they take a job based on a new salary, how to deal with situations they have in their current employer. So we'll do some more on that. But that's a wrap for today. Thank you all for joining. Be sure to leave comments and like the video. If you haven't subscribed, please do. You can head to our website to get on our free resource library and get on our mailing list. Feel free to shoot an email if you have any questions. But thank you, and we'll be back with more videos soon.